So let's get this webinar started. Welcome, everybody. My name is Adam Petricoff. I'm the managing partner of VR Business Brokers here in Charlotte, North Carolina. And today I'm super excited. We have Andrew Kittelson with UBS to talk about wealth management for owners. He is a certified exit planning advisor and really is one of the more knowledgeable people in the area and in the region on this topic. And let me take a step back before we jump in. Why are we doing these webinars? It's really simple. As a professional who's helping people exit their business, there always is a greater need, or there continues to be a greater need for educating clients, existing or future clients, about things they need to be thinking about well in advance of exiting their business. And one of those topics is money, managing your money. And so, like I said, we've got Andrew Kittelson here today, and we're going to dig in. Let's do it. Andrew, you ready?
I'm ready, Adam. Thank you.
Anything you want to say before we jump in?
No, just the importance of, planning early. We'll get into all of that. I just wanted to say thank you for including me today in this very important discussion, around one of the biggest decisions an owner will make, since probably starting the business, is exiting it.
Well, great. Well, let's jump in. Couple things here, if the technology will work. Just a disclaimer, this is for general information purposes only, and everything we are talking about does apply to the $300,000 business owner and the $30 million business owner, because ultimately managing your money is vital to everybody. So, Andrew, let's jump in. You do this every day for a living, talking about the importance of planning. You can't wake up on a Thursday, decide to sell your business next week, and get your cash 30 days later. You got to have a plan. So jump in here, Andrew, and talk about some of these things on this slide here.
Sure. You'll see this is a common theme, is the importance of planning, and not just planning from the financial standpoint, but really all encompassing. So looking at the financial planning, the business planning, are you growing your business, to move to the next generation, or getting ready to sell it, but having a business plan in place, but also the personal plan. So I think we skipped ahead a couple of slides, Adam. The personal plan.
Apologies.
Yeah, no problem. The personal plan is, going to encompass the things that are important to you personally, your health, how you like to spend your time, because you've poured a lot of time into the business. How are you going to spend your time post-exit? So really giving some of that thought on the front end goes a long way to having a successful exit, because the truth is 100% of owners will eventually exit their business. Are you going to have control over that process, or be beholden to circumstances? So there's this concept of the 5 Ds and selling your business through the 5 Ds, which are death, disability, divorce, disagreement, and distress. It's not a good way to go, and probably ultimately leads to a discount in the value of your business. But if you can get ahead of it on the front end and go through a planned, orderly transition, you're most likely going to have a much better outcome. 75% of business owners, this was a study done by Price Waterhouse, 75% of owners profoundly regretted the exit after the fact, and the majority of those advised other owners to really plan early. And it really all does come down to the planning, from the financial component, the business, and personal. And the minority of business owners that take their business to market actually sell. Maybe the business isn't ready, maybe it's not attractive enough, and that's very important to determine going into it by bringing some professionals in that can give you an idea and a roadmap to get to your ultimate destination. So in the beginning, like with any planning, where is it you want to go? What are those things that are most important to you, right? Because we all only have so much time and so much money. How are you going to spend that? What's your life's vision after the exit? From a financial standpoint, how much money do you need? But also, what are your passions? Where do you derive fulfillment from? And thinking about that on the front end, again, is going to lead to a better transition on the back end. You've spent so much time and energy building a business over several years or even decades. It's important to put an appropriate amount of time and energy, because it will take energy to do this properly. But if you put that energy in, you match the energy you've put into growing your business, it will help you through the exit.
So let me jump in here. As someone who works with owners, I can tell you first of all, these are Andrew's slides, and we're not here to sell anyone's services. We're here to educate. I want to make that very clear. But those three first bullets are all so true. And I would focus on the second one personally. A lot of business owners have regrets, and when they realize the uniqueness of selling a business, and you talk to them after, their number one regret is that they don't let go, that they're afraid that by bringing in that they should have brought in advisors earlier. They should have brought in a wealth advisor. They should have brought in their attorney earlier. They should have brought in a business broker or investment banker. They should have brought in family members. Regrets are real. And what I like to tell people is you've got to get your advisors right early, and Andrew will talk about this later, but you get one chance to sell a business, and you got to do it right. So planning is just so vitally important. Okay, so let's move on to the next slide here, where we talk about the process. Andrew, at a high level, you want to touch on this here?
Sure. And this is one process that's developed by the Exit Planning Institute. And the chart's a little bit busy. We're not going to go through it in detail. But on the far left-hand side, obviously very important to take inventory of everything in your life, from the financial assets and liabilities, on the personal side, business, but then also personally taking inventory of where you are and setting those goals right at the end. And then once you have those, like any planning process, you can figure out how to bridge that gap. And to bridge that gap going through this process, it is important to get the right people in here to help you along the way. And I'll focus on the box that has the red lettering in it. When you go through this process and bring the team in, you're ultimately going to educate yourself. And as Adam said, that's the importance here. That's what we're trying to do, is educate owners as much as we possibly can, because there really are a number of resources out there for you. So by the time you get to that decision point of whether or not to sell or keep the business, continue to grow it, you're much more educated. You're going to have a much more valuable business, no matter which direction you ultimately decide to go.
And I just want to clarify and add to Andrew's point. This is not just a slide, or this discussion is not just for business owners, and we have many business owners on here today, but it's also for the advisors that are working as part of this. The more all the advisors work together, the better. I work with wealth advisors or attorneys or estate planning, the better the better outcome you're going to have. So we even have a couple buyers, people that are looking to buy a business on this today. And you can't start thinking about this early enough. Literally, after you buy a business, you should be thinking about your exit, whether it's in 5 years or 15 years, making sure all your activity is intentional. Well, let's move on here. Let's talk about assembling a team. The first question, I ask when I'm talking with a prospect, the first question I ask them is, who's your attorney, who's your accountant, and who's your wealth advisor? Those are the first three questions I ask. And most people have an accountant because they file taxes. Most people sort of say, I have an attorney, but I'm not sure they're the right attorney, or I only call them when I need them. They're really good and they're great friends, but they may not be a transaction attorney. And amazingly, by far, most owners we talk to do not have wealth advisors that they've been talking to. So I can't stress this enough. Andrew, you want to talk about assembling a team?
Sure. Yeah, I think, most business owners have 80+% of their net worth in the business. So it's common that maybe they don't have a wealth advisor going into this. But one thing's for sure, you're going to be working with professionals that, unless you're a serial entrepreneur or have been through this process before, you haven't been through it, and you're going to you're probably not going to have relationships with some of the folks that you need, on your team. But it's important to put that team together that can bring you through that process so you have control and greater influence over the entire process and ultimately the sale. The goal of your team is to really improve your odds and ensure that you're in that top 25% of owners that are fulfilled and happy after the sale of their business. That was one statistic, I keep going back to it, that really blew me away as I dug deeper into this profession. And having not gone through this before and spent years or decades building your business, may not realize that there really are unlimited resources, experience, education that you can tap into. A number of the advisors that ultimately you'll end up working with can share their knowledge with you, some at no cost, folks like myself that are trying to provide, this is how we differentiate ourselves and provide value on the front end. So there's a tremendous amount that you can get from the right network of people to plug into, and making sure that that team that's assembled is all comfortable with, has experience with collaborating together these multiple disciplines to help guide an owner through a successful exit. So a great question is, where do I start? So if you want to go to the next slide, Adam, as Adam spoke of, most business owners have a CPA, and that may be their most trusted relationship. So wherever your most trusted relationship is, that's where I would go to first and ask them about the exit planning process, what their network is like, and if they can bring, the appropriate people on the team. You see some of the folks here that would help guide you through a transition, right? From an M&A professional like Adam, your CPA, estate planning attorney, a business attorney. Maybe you've got a business attorney that helps you get incorporated. Do they do transactions? Are they experienced in that area? You want to make sure you've got an experienced business attorney. So maybe you're plugged into a law firm and you like your attorney, but they're just not a transaction attorney. Maybe they can introduce you to someone else. I think the important point here is that any one of these folks could really serve as the lead to build your team and to lead the collaboration. So again, go to your most trusted advisor and leverage them to help put together the team. Because anybody who's on this call that's been through this before knows it is quite an undertaking to sell your business when you have buyers that begin going through your financials and things like that. It's imperative that you get the team in place that has you best prepared for when you do get to that point.
So let me stop right here. As I look, I see some of the names and the numbers of people that are here. I want to encourage you in either the chat room or the Q&A function within Zoom here to please ask any questions. We'll try to incorporate them into our discussion. But please, this is participatory. This is we want this to be educational. So if you have something you want to ask either one of us, we'll make sure we integrate that into our discussion. So my only comment on this is, this is pretty basic comment, but if your spouse and immediate family is not on board, it's not going anywhere. We actually have something as part of our process. We want to meet with the spouse to make sure that they're on board. because we want to make sure that we know that they're committed, both of them, who, if they're not both working in the business, that both of the couple are truly committed to getting this done. So let's move on here. Let's talk a little bit about family dynamics. That's a whole different session, which I'm not going to jump in today. But we do have something upcoming in March about dealing with family dynamics, and I can say that having grown up in a fourth generation family business. But Andrew, high level here, you want to talk about some of these bullet points here?
Yeah, we could spend all day on this alone for sure. And before I do that, I want to add one other thing to the previous slide. A category that maybe is not in there are those folks who help business owners really, drive their value, really drive value up. So whether that's a consultant on the sales side, or maybe upgrading your systems, or a CFO or a part-time CFO. There are other folks
getting your books in order. Yeah, absolutely. It's a great point.
For sure. But back to the family dynamics. A lot of folks don't do the pre-planning, and even those that don't include the family early on, and we can't stress enough the importance of including family in this process if it's a family-owned business from the beginning. And as a family-owned business, you may have some children or other family members that are working in the business and others that do not. So developing a framework, having a conversation around how do you treat those family members fairly, if not equally, right? Because some are going to be more involved in the success of that business. So having those conversations and mapping out a plan for as it relates to those relationships is important. Going on to family governance, this is a whole other topic and could range from a formal process to informal. And every family is different, obviously. So there's no typical process here. But what I wanted to emphasize is, as you create this wealth, and you've got wealth that takes care of your generation, maybe other generations, how do you sit down and talk to the family about what's important, shared values, vision, maybe even having a mission statement as to really communicating what's important to the family. It might be philanthropic concerns, but really this is about getting everyone on the same page so that the family wealth really maximizes its impact.
Yep.
And has a long-lasting impact as well. Another question we get from business owners, or a concern really, is, hey, we created this wealth during our generation, and there's obviously multi-generation businesses that are out there and are very successful, but it's typical. I think the number is 30% of businesses pass to the second generation, and something like 10 to the third generation. So it is the minority that are passed down generation to generation. So it might be the first time the family's experienced some significant financial wealth. One of the main concerns of those that built the business is educating the next generation, or not just the next generation, but other family members. And that financial education could range from some of the topics we're talking about: financial planning, estate planning, taxes, investments, asset allocation, philanthropy, sustainable investing, among many other topics. So it's important to incorporate that education into the family as well.
Okay. Before we go on to the next slide, Andrew, we got a question in going back to the prior slide. Why is the lender not on here? I'll let you take a shot at this. Why is your financial partner not on here? Any thoughts on that?
Yeah, it's a great point. You should have the lender on there as well. I mean, quite frankly, the slide starts to get a little busy we could fill in. So the lender needs to be there, and that might be your most trusted relationship. And that's somebody that could help, really spearhead or be kind of the captain of your advisory group of professionals to lead you through this
And
training.
the way I would answer that is in that bubble of financial advisor, that may be your banker and your wealth advisor. So things related financial is the way I would answer that question. But absolutely, I just wanted to clarify that you should be having conversations with your lender. Okay, moving on here. So I don't want to get, I know this can get really, really detailed and overwhelming, but just really high level, Andrew, talk about some of the techniques that wealth can be transferred.
Sure. Again, this could be a day on this topic as well. And obviously varying levels of wealth determine what strategies might be most appropriate. But something we often see, right, is a partnership in a business where there's two or more owners. And again, the majority, 80% of business owners' net worth is typically tied up in the business. So if that's the case, and in the event, unfortunately, one of the partners passes, how do you take care of buying out that partner's family? And that really comes in the form of a buy-sell agreement, which is an agreement coupled with typically life insurance. So I know we probably have many people on the call that are familiar with buy-sell agreements, but for those that are not, that's a basic technique that's important to have in place to make sure there's liquidity. So if Adam and I own a business, we're 50-50 owners, our business is worth $10 million, so we each have a $5 million interest, but none of us has that much in liquid assets. If something were to happen to me, there's a life insurance policy in place to provide the liquidity for Adam to buy my family out. Is there anything you wanted to add?
No, I mean, I'm amazed how few people actually have buy-sell agreements. We just met with some partners last week, and they have nothing in place at all. It seems so obvious, but they just hadn't gotten around to it. They said, well, we couldn't do it when we started, and we got busy, and here we are 15 years later, and we've never done it.
Yeah.
It's never too late, but.
And it's very, very common related to buy-sell agreements in the planning process in general. Again, we all only have so much time. Most business owners are stretched very thin, trying to grow the business, make sure you have the right technology, people in place, take care of customers, whatever it may be. So often, whether it's the estate planning, these buy-sell agreements, just planning in general often gets put on the back burner. And we're here to try to help bring it to the front burner because it is important. So along those lines, gifting is often something that is an appropriate strategy to transfer wealth, whether that's to the next generation, or maybe it's to, again, a charity through a charitable remainder trust. But timing is very important to maximize the impact. Do you do it pre-sale or post-sale? Mm-hmm. Again, things that your estate planning attorney, valuation folks can help you determine. For example, let's say you've got a business that is a very high growth business. It may make sense to do some discounted giving before the sale, before you realize an increased value. And again, the timing of that is important. We can get into the weeds later on about IRS rules, and if you have a binding agreement, it's too late. If you've got an LOI, it's a little bit of a gray area. So it's important again to talk about that early on. And then when
so let me just go ahead, Andrew. Please.
No, you go ahead.
I was just going to add from my seat, the time to not have that conversation is after the sale. You say, okay, I'm going to call my wealth advisor. Now that my CPA has told me how much I have after taxes, I'm going to go talk to my wealth advisor. And that's why we ask these questions up front. Who's your CPA? Who's your attorney? Who's your wealth advisor? You should know before you go to market what the potential net proceeds are going to be. And you should have a plan with your advisor, with your spouse, with your family before you go to market. These are things that I just can't tell you. Not only are you going to be more successful, you're just going to have greater peace of mind. This is an emotional process, transferring a business. And so the more you can have in place and plan with the appropriate professionals, the better, what I sort of say is the intestinal fortitude you're going to have during the process, because you're not as concerned that you haven't dealt with taxes or wealth or any of these other issues we're talking about. So it goes back to Andrew's slide, which is planning, planning, planning. We can't do this enough. I know there's a couple other wealth advisors on this call today, and I've worked with them, and just like Andrew's worked with other exit professionals like myself, M&A and brokers, and we're all here we're just trying to get business owners to understand that these have real world implications. And so the more we can plan up front, utilize the experts, and when you don't know, get an expert to help you. Sorry I went a little long-winded there, but I'm really passionate about it because I just see so many people wait until after the transaction. They say, okay, well, now I got to go manage this money. And they may have been able to do some things from a tax perspective and other things. So go ahead, Andrew.
No, that's great. Yeah, the final point here is just different giving vehicles. We won't get too into the details here, but family foundations versus donor advised funds. Family foundations are a mechanism to allow families, say, to get together on an annual basis and talk about the money and distribute it to charities. They're able to use some of the funds for travel and things of that nature. The family is really in control of where the money goes, and there's some IRS limits that you got to distribute 5% of it annually, and that can include investment fees and administration fees and things along those lines as well. So it's a little bit more difficult, let's say, to sort of administer, but there's benefits to it. And on the flip side, a donor advised fund is a really easy, simple way to give money into a donor advised fund. Ultimately, you can dictate what charities it goes to, and you have more flexibility in that you don't have to give away that 5% every year.
Yeah. So we have a question. I'm not going to identify the person, but they're in a let's call it a family business, and they want the next generation to become owners, but they aren't necessarily willing to give it away. So I want to, before I let you answer that, Andrew, I just want to tell everybody that in March we will be having an expert on family dynamics and family transfer, and how to have these conversations. So if you've signed up for this, you will certainly be getting an invitation to that. It's a huge, huge topic that is not discussed enough. I can say that for personal experience. I grew up in a fourth generation family business, and my generation, my brother and I and sister, ultimately helped determine that it was time to exit on behalf of the prior generation so they could realize the benefits. But these talks with families are hugely important from a wealth perspective. Andrew, any thoughts on this topic you want to share?
Yeah, absolutely. Obviously, taking it back to the owner, most importantly, and what's important to you from a financial goal standpoint, right? How much money do you need after taxes to live on, right? Because as you've been in the business is the financial engine, right? That's what generates the income, establishes your cash flow, pay a lot of your expenses probably out of the business. And that completely changes after you sell it, pay taxes, if it's that type of a transaction. And then you put it into the capital markets, stocks and bonds and cash. And, let's say you're running that plan at about 6%. Does what value do you need to get to maintain your lifestyle? And that's obviously the starting point from my perspective. And then once you know that and know what you need as the business owner, then you can start talking about how best to transition it to the kids without giving it away, as I think the question stated.
Yeah,
then,
and I think even a more macro is understand, and we'll get into this in the future, but understanding the true value. The generations sometimes have different values on what the business truly is. So there's a lot of things to do. Third-party certified value experts that can come in that are just understand the dynamics and really have a third-party objective opinion of what the business is worth. But I'll tell you, at the end of the day, the market is ultimately the best determinant of what the value of the market is. Let's talk a little bit, Andrew, about planning after the exit. Whoops, let me go back up here. So you want to talk about these 3 L's here that you talk about, and then I'll pull up a moving slide here next.
Sure. Again, right, as we were just talking about, going from the business being the financial engine to now the capital markets being the financial engine, and you're completely changing the way you're paying yourself, so to speak. So developing a framework around that is very important. We like to use this 3-pronged strategy. We call it the 3 L's, where we focus on 3 different buckets, okay? A liquidity bucket, a longevity, and legacy. So your liquidity bucket is short-term cash needs. That's the next few years, could be 2 to 5 years as the slide states, but making sure you've got the expenses, the money set aside to cover your expenses over the next couple of years to maintain your lifestyle. Then you can focus on the longevity bucket, which are those assets like stocks, as an example, that can provide you a rate of return that will beat inflation, which is projected to be 2%. So that's, from the liquidity to whether that's 2, 3, or 4 years on through the rest of your life, having that longevity bucket filled. And if we manage that correctly, you've got enough money to pay for your expenses. So when the markets inevitably do have their gyrations and pullbacks, you can ride right through that without much of a concern, because you've got the liquidity bucket taken care of. And every year we'll take money from the longevity bucket and move it over to the liquidity bucket to make sure there's enough there. Once you've done that, and we've planned for that, the final bucket is the legacy bucket. Leaving more, making sure there's enough money there to go to those that are most important to you, right? Whether those are family members or philanthropic endeavors, transferring to the next generation. These are for those needs that go beyond your own. So we think, managing your liquid net worth now in this type of a framework or something similar, put structure to how you're paid and make sure that you've got enough money to last you, throughout your lifetime post-exit.
Yes. So, I'm getting a question here I want to bring up. This is a really good question, Andrew. You and I have talked about this, at various times and conversations. So this is from an owner, and he or she, I'm not going to identify, is basically saying, this is great information, but it is also overwhelming. And they're saying they're not ready to sell in the next couple of years, just starting to think about these topics. Where would you tell them to begin? What is one concrete thing a business owner can walk away from this discussion that they can do over the next 30 days that will move them closer towards, a plan? What's one thing they can do?
Okay. So this sounds obvious, and maybe they've done that, but for anybody who hasn't, really start with being clear and identifying what it is you want. Can't tell you how often it is we sit down with someone and ask them, what are your needs after taxes on a monthly basis to live? Very basic, but very critically important. So, know what that number is for you, and then also what your other goals are. So I think stating your goals and being clear about that. When do you want to exit ultimately? How much do you need? And what do you want to, how are you going to spend your time? What are those things you are passionate about that you derive fulfillment from?
Yeah.
And those are the goals. And then we can start working on what do we need to do to get to those goals. And I would say, reach out to whoever your most trusted advisor is and ask them what resources, materials, maybe you want to start with, if it's too intimidating, you want to start with educating yourself by reading. There's unlimited resources out there. I was just searching on Google or tapping into Adam and his network or your CPA. They're going to have information on these different topics, because you're right. It is a bit intimidating. It is a lot to digest. But the most important thing is state your goals and start working on identifying the team, because they're really going to help you do this. If you do go about this yourself, you're going to find that it really is like a second job, and you're doing a second job that you probably don't have a lot of experience in. There are a number of people out there that will be happy to talk to you, some on probably a very, no obligation type basis, to start accumulating knowledge and information, because it would take a few years to exit a business, probably with the ultimate kind of optimal outcome.
Yeah. And I always tell people, trust your gut and trust the experts. If you are sick, you go to a doctor. If you have legal issues, you go to your accountant. So there's a lot of different people in running your business that you're in touch with, or ask other business owners that have been through this process before. One of the things that we encourage people to do for the business owners out there is to really truly get a good independent valuation on your business. There's nothing worse. I have heard it fourth quarter last year. I had a couple come in, and one spouse had been telling the other spouse that their business was worth $4 million. And we gave them a valuation, and it was about worth $2 million. And there was screaming and yelling between the couple in our conference room, because they had all these plans based on the number that was in one of the spouse's head that had been telling the other that it was worth $4 million. And, all of a sudden, it was a very uncomfortable conversation that I did not enjoy witnessing, but I can't tell you how that could have been avoided had the business owner, before they were ready to sell, had a better understanding of the valuation of their business. So that would be my one piece of advice, is trust your gut and trust your existing experts. We got a couple minutes left. I want to be sensitive. We have one more question here. I'm going to bring that. Andrew, is there anything else you wanted to say here before I ask this other question?
I guess to just reiterate your point of the importance of evaluation, right? And you can pay to have a formal valuation done that can hold up in court or estate planning, but you also have a number of resources like Adam, who's in the market. And as you stated, the market would tell you ultimately what the business is worth, but you got to get an idea to begin the basic planning that we're talking about. And there's a number of resources to do that.
And look, it's not just brokers or investment bankers. Wealth advisors have access to good software. Some CPAs are do out there, so it's not just one or the other. So last question here. I just want to add from of our participants here is how do you think the potential tax changes could impact the transfer of wealth and or sale of businesses in 2021 and 2022? Before you answer that, Andrew, that is a 5-hour webinar. We're going to ask Andrew to give about a 60-second answer in that. But look, there was a change of administration recently, and there will be some changes. No one knows what it'll be, but Andrew, I want to let you give an answer to this question.
Sure, and I think this is in general why revisiting planning and planning being an ongoing process from the beginning all the way through the end until you're done with your retirement. It's important because there's going to constantly be changes, right? There's tax law changes. So the consensus out there is that taxes are going up. Obviously, nothing's done. We got to wait for it to all go through Congress, but probably capital gains are going up. So it may make sense to, you don't want to drive your entire decision based on taxes, but it's a critical component to think through as you're going through this process. So the exclusions are probably going to come down from an estate planning standpoint. So it may make sense to do it earlier, to do some of this giving or discounted giving earlier while there's a larger exemption amount. This is why it's important in your estate planning documents that there's some flexibility built in there so that they can be adjusted. But I think it's safe to say taxes are probably going up, and it'd be great to get, a CPA or somebody who's really more in tune with where they're going. And we have our thoughts on where they're going. Corporate taxes probably go up, right? But not as much as we're not all the way back up to 35%.
Right.
So engage.
All the more reason to have an annual plan and keep working on this, because there will be legislative changes over the next 1, 5, 10. There's always going to be changes. I would tell you from our perspective, we anticipate more people coming to the market this year to take advantage of potential tax changes in 2021. Historically, they don't make them retroactive, so that's traditionally what we're anticipating, what our industry is anticipating. Before we get out of here, I want to here we are. I just want to let everyone know that this is the way to get in touch with the video, or the slides will be available. The answer is yes. We will make these available. I will be sending out an email to everybody, both who attended and didn't attend, with a link to the information. And if you want the specific slides, feel free to reach out to Andrew or I specifically. And I want to close by telling you that, next month, we're going to try something very different. I'm going to bring on a fellow business broker who's a good friend and one of the top selling brokers in the entire country. Russell Cohen is out of Florida. And so we're going to talk about catering to those that are contemplating your exit from a business broker's perspective. What things you should be thinking about now, whether you want to sell in a month or a year or 5 years. So again, that's one of the people in the circle that Andrew and I went over, and we're gonna do that next month, February 18th. I mentioned also Robert Caldwell, who I believe is on this call. We'll be talking about family dynamics and those that have family businesses. We have a whole host of great ideas and thoughts and topics, and I'll be sharing my own 2 cents, having grown up in a 4th generation business. So we're going to continue to have educational monthly webinars to make sure that we're doing our job to help educate the community out here of business owners, of advisors, of people that are at some point going to exit. Andrew, this has been great. This has been fun. Really enjoyed it. Really appreciate your time and your knowledge. And again, we'll send you out the link to this. I want everyone to thank everyone for their time, and thank you all. And Andrew, it's been fun, and let's do it again.
Thanks for including me, Adam.
Thanks, guys.
Great day.
Thanks, everybody. Have a great afternoon. Bye-bye.